I mean, yesterday when he announced it, immediately after announcing it, the Canadian dollar dropped by an entire cent. We went from 70 cents to 69 cents. Our dollar's at the lowest it's been in like 30 or 35 years. That's terrible for Canada, for trade in general, and it's bad on the U.S. economy. I mean, they rely heavily on Canadians going down there and spending our dollar. So there's a lot of people that aren't going down.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren. Hi, everyone, and welcome back to the Ottawa Real Estate Podcast. Just a friendly reminder that if you ever have any questions about mortgages or real estate, Dave and I are here to help. You can find our contact info in the description below. David, how are you doing? What's going on? We're back.
Good. I feel normal again. I'm back in front of my normal mic, my normal computer, not those crappy headsets, and in a hall that was getting disrupted last episode. I was alone and then was infiltrated by 40 seniors all at once for a board meeting.
Board meeting and bingo, at the in Fort Myers.
Holy smokes! Yeah. What do you expect? What do you expect in Florida? You know, you find somewhere quiet and then get bombarded by a bunch of seniors.
The mimosas and bingo starts early in Florida, The old 6 a.m. starts. That's so good.
Holy smokes. Yeah.
Yeah, no, I realized last week, too, I have to apologize to people listening because when we first entered the studio, I had to leave and come back. And when I came back, it defaulted my microphone to my webcam mic, which was absolute crap. So for anyone who's listening last week and it sounded like I was basically eating the microphone, that's why. I did not have a microphone for breakfast. It was just, it was a technical issue. So hopefully I'm a little clearer this week, a little crisper.
We had a little bit of a hiatus. We're getting the cobwebs out.
Yeah, exactly. Lots of news, David. Lots of news. We got to cover. Yesterday was, now I guess 2 days ago, was Donald Trump's inauguration in the U.S. So lots of interesting news coming out of there. He touched on the tariffs, which I know we're going to touch on as well. But some more important positive news, I believe, coming out of Canada this morning.
Yeah, they're at basically, an hour ago when we're recording this on Tuesday morning, inflation came in at 1.8 in December, which was great. This was lower than consensus expectation, which was 1.9. The interesting part of it is that it was led by food and restaurants numbers, but it was interesting. The Bank of Canada did comment that it was a result of the no GST through the last couple of months that contributed to this. And without the tax break, inflation would have risen to 2.3%. Obviously a good thing with it coming in at 1.8. It is a little bit masked because of that tax break, which I believe is now back. I don't believe there's a tax break still anymore. But I think it's kind of interesting that the Statistics Canada and Bank of Canada would comment about, without the tax break, it's at 1.8, 2.3 with it, or with the taxes. And then at the same time, they've been saying this whole time about the carbon tax that it's not inflationary.
Right.
Obviously, this, the numbers from Stats Canada this morning are directly illustrating that taxes play a part in inflation. In this case, in December, 0.5% of the inflationary number. The true inflationary would be 2.3. It's 1.8. So that's a big difference, and I think it's very interesting that they would say that the carbon tax figures are not inflationary. And I know that's been a contentious issue of both parties try to argue one side or the other, but I kind of looked at this article this morning, and that's the first thing that popped in my head is, as we're also seeing this impending increase in carbon tax, likely, potentially, obviously our government's prerogative, so who the heck knows what's going to go on with that. But, I thought that was kind of interesting in this article from StatsCan. I don't know what your thoughts are on it, but yeah, that's kind of one thing that jumped out at me.
Yeah, I mean, it's the carbon tax itself directly raises the cost of fossil fuels, so energy sources with, high carbon emissions. So this, in turn, obviously increases the cost of the production of goods and services and so on that rely on those sorts of inputs. So no matter what, businesses are going to pass along those costs to consumers, which is going to be inflationary, right? That's kind of my high level non-economic understanding of how it could be. Now, everything, I mean, even just going to the coffee shop, seeing that kind of round number for payments, it's kind of nice. I think I speak for everyone when it's kind of nice to have that break. It actually goes till February 15th. I think there was some confusion on dates, but we still have another almost month of the no tax. Where I'm really noticing it is, being out for lunch with a partner or what have you, and your bill being that $15, $20 less, it definitely, you notice it, right? Like, it actually is a noticeable change. So I don't know what the solution is. I mean, it's a great 2-month break, but inevitably we're going to pay for this over the long term. I think there's talk of the carbon tax going up 3-4 times. And there's a lot of back and forth, obviously, politically, with on both sides trying to argue the benefit or the cost to each. And I'll keep, I guess, my opinion to myself, but I'm of the opinion that smaller governance is better. Less money from the taxpayer, the better. We've just seen so much pressure on inflation over the last couple of years with the printing of money, and during the pandemic, and the mismanaging of that money, I would say personally, as to where it's been allocated and so on. Now, again, I'm not an economist. I'm not an expert. So certainly I don't want people in the comments being like, well, how would you have spent it? And it's not, I don't know. I'm not an expert. But it's easy to say on the outside, to throw that stone and say, you mismanaged my money, So yeah, interesting. I think it's impossible to say that the carbon tax is not inflationary. To me, it seems quite obvious just based on, my explanation of who's using the fossil fuels and energy sources that require that kind of emit that carbon. Also, just in general, like, gas prices have kind of stagnated a bit now, but I mean, it's still very expensive. I mean, I have a kind of a normal sized sedan, and it's, $100 now almost to fill it, which is insane, so it's not sustainable. So I'm very interested to see what happens in this coming year. What's the latest, Dave, on the election front? Because I know that and again, this is kind of off. Sorry, I didn't prep you for this, but I know right now, like, there's a few people that have kind of stepped forward on the Liberal side for leadership. I don't think that's been selected yet. But what's kind of the timeline as far as when there could be that kind of, in quotes, carbon tax election?
Yeah. So I mean, I believe the Liberal party is choosing a new leader. There's a campaign that's going to run for who's going to be running for that leadership race. We had, I think, Mark Carney and Chrystia Freeland put their hat in the ring, who kind of were the assumptive people to be front runners in that regard, and likely Carney. But I believe they're choosing the leader of the Liberal Party beginning of March, which then would, I think it's March 9th, I want to say, and then that would, I think it's end of March is when government's back in, or prorogue's over, and then there'd be a vote of non-confidence or a forced election, if you will, and then it's like, I think it's 45 or 60 days from then. So it's pretty imminent. Yeah, it'll be interesting to see. And it's going to be interesting to see, I think, what over the next month or so, Mark Carney has a lot of experience. Obviously, he was the governor of the Bank of England, the governor of the Bank of Canada, sits on a lot of boards, has a big, quite an extensive resume with background in economics and financial management or economic management of multiple different countries and companies. So it'll be interesting to see what their shift is, or if there's a shift in the Liberal Party's kind of, and how that's going to, kind of affect the possible outcome of an election.
Right.
I think that, right. It is a fresh face. It's not anyone that's ever held an MP position, which is, I think, an oddity. So yeah, I think that'll make it an interesting race and kind of an interesting, fresh look on things as far as policy and like you said, that carbon tax election standpoint, whether they maintain that, going down that same path. one client reached out to me a couple of weeks ago, just talking about it. I don't want to harp on the carbon tax aspect, but it was really interesting because yesterday I was reading a lot about the prices of hydro in New Brunswick. Their costs, a lot of people in small 1,100 and 1,200 square foot homes, that their hydro bills being $600 and $700 for the month for hydro. Like the hydro costs in New Brunswick being astronomical, and them only getting $29 back on a $650 bill when it's supposed to be 10%. Kind of like that. $29 on a $650, like that doesn't equate to this to the 10%. So people questioning that. But somebody in Ottawa, a friend and client, I was chatting with her and looking at her Enbridge bill of $184, 62 of it, and it's broken out. Enbridge breaks it out now of what the carbon tax is. 62 of it is carbon tax, and then it was tax on top of that, tax on the carbon tax. So it worked out to being $84. It was $22 of tax. There's $84 of that $184 or $194 natural gas bill.
Being taxed on the tax.
Yeah, I
Canadian.
don't, it'll be, so, all of this, and I kind of go on this, it's not to harp on all this, but, we're talking about inflation, we're talking about how that affects and how that parlays into the real estate market. And I will say, neither Paul or I are economists by any means, but, how it kind of parlays into the real estate market is all these numbers and inflation coming out today, is that it affects the bond market. It affects the Bank of Canada's decisions of what they're going to do. Trump last night mentioning and bringing up in kind of almost in a passing way that he's looking at February 1st for 25% tariffs to Canada and Mexico. It's almost like a blanket for all goods. He said in passing, it wasn't that he was signing legislation or an executive order of it. I think, you and I were talking about off air, likely just a posturing for negotiation. However, it is something that is very realistic of coming to fruition. And how does that play into the Bank of Canada's rate decision? I think it's January 29th of what they do with Bank Prime. Like BMO, RBC is at around a 60% odds of a drop. But I'll be interested to see what their expectations are, what the messaging is from the bank economists now with the inflationary numbers coming in where they're at. The true inflation number, if factoring in taxes, would be up, at 2.3, as opposed to the 1.8. So there is kind of that to dig into of what that true is. And then, this morning we've seen the bonds down a little bit, but, you and I, we were talking about it last week of kind of that yo-yo of the bonds, but, we've really seen that really come up and down in the last 2 weeks.
Yeah, I have, here's the chart. I did a 3-month chart just to kind of see how much of a roller coaster it's been. But you can see here, like October 22nd, it's at about almost 3%, 2.97. And then it kind of spikes up to 3.3 in November, then drops all the way back down to 2.8 December 6th, and then back up to a peak of 3.14 as recently as the 15th. So that's a week ago. And now it's back down today to 2.96. These we've seen, we saw probably around the December, early January, probably around here on this uptick. January 10th, January 11th. That's when we started to see lenders increase rates, and they've held them there. We haven't seen many come down in the last couple days. It's kind of been a wait and see, right? They want to kind of see where that number is as well, because this is the number they're kind of borrowing against, and then they create their spread and offer their own kind of fixed rates. I wanted to touch on the Trump tariff comment for a few things, because I just put together kind of now again, we're both in agreement. I don't think we're ever going to see this tariff, just to be clear. I mean, I know they're saying February 1st, that would be 9 days from now. I think it's totally posturing. I think it's just Trump's way of, bullying, I guess you could say, in the sense of he knows that this would be pretty devastating for our economy, and it's kind of just forcing the hand. This is my opinion. But this is, if it does go through, here's kind of a few just bullet points on the economic impact and kind of sector-specific consequences. So I'll just touch on that really quickly. The economic impact would be the trade disruption. So with approximately 3.6 billion worth of goods crossing the US-Canada border daily, tariff like this would disrupt this substantial trade flow affecting industries ranging from automotive to agriculture. I would say probably leaning more towards agriculture here for Canada. The gross domestic product, so GDP, analysis suggests that the tariffs could lead to a 2.5% reduction in Canada's GDP by early 2026, which would put us towards a potential recession. That's kind of worst case scenario. And then from an employment standpoint, it says the economic downturn may result in significant job losses, with estimates of up to 150,000 layoffs, increasing the unemployment rate to 7.9% by the end of 2025. This is obviously, skies falling worst case scenario, but these are like the potential impacts of that. And this is why he's threatening it, because he knows that these would be, crippling to our economy. Sector-specific consequences, I just have two, so automotive and energy. So from an automotive standpoint, the integrated nature of the North American automotive sector means that the tariffs would disrupt supply chains, leading to increased production costs and potential job losses in Canada. And for energy exports, Canada supplies 20% of U.S. oil consumption, so tariffs would strain this energy relationship, potentially leading to increased energy costs and supply chain disruptions in both countries. Yeah. Now, as far as the political responses, I know Justin Trudeau stated that nothing's off the table as far as responding to tariffs. Doug Ford has advocated for severe kind of retaliatory tariffs. And the Alberta Premier Danielle Smith opposes halting energy shipments to the U.S., highlighting the complexity of formulating a unified national response. So as we've seen, there's been a lot of political discourse in Canada over the last few years, many differing opinions, both between citizens and also leadership. So this is very interesting, like seeing over the next 2 weeks, what is the result of this? If it is posturing, like what's the response we're going to have that's going to kind of deflate that? No pun intended, I guess. And what are the results of this? I think we're both in agreement. I don't think we're ever going to see these tariffs come in, or it'll kind of be pushed. Well, now we're looking at March 1st, April 1st. It'll just kind of get continuously pushed out. But let's say worst case, Dave, it does get introduced on the 1st. Like aside from those things I mentioned, is there anything else you could see that would, negatively impact our economy here?
I mean, both economies are in basically every facet are so closely linked. I really don't see it happening, and really it would affect American jobs as well and make things more expensive for Americans. So I think right now it's just we have no working government, pretty well, and our leader, like our prime minister, has stepped down from his party. Even though he's still prime minister, but so I think it's, to your point, I'd be surprised if it does come into effect. It'd be interesting to see how the provinces react. I think they would kind of go off on their own, like Alberta's Premier Smith has mentioned. I think it would have grave consequences. There's still tariffs on like softwood lumber and things like that have been, devastating for those industries, ongoing for ages. So to bring in additional tariffs, I think is going to have grave impacts. But again, I don't think that that's going to happen. I think it's just there are issues that he wants us to address, and there's the North American, I forget the acronym right now, the U.S., Canada, Mexico agreements up for negotiation, or is up this year. So, again, posturing for that and using it to his advantage of that there's no, really no government in power, so to speak. There is, but there isn't in Canada. And so I think it will get pushed off until an election happens, but who knows? Again, I'm not a political expert or
yes, you are, David,
an economic
Dave's
expert.
Giving
so
political advice.
It's but I do think, to your point, I think it will be interesting to watch how things react. I mean, yesterday when he announced it, immediately after announcing it, the Canadian dollar dropped by an entire cent. We went from 70 cents to 69 cents. It's the lowest. Our dollar's at the lowest it's been in like 30 or 35 years. Like that's terrible for Canada, for trade in general, and it's bad on the U.S. economy. I mean, they rely heavily on Canadians going down there and spending our dollar. So there's a lot of people that aren't going down. So I think the market was quick to react yesterday, and it'll be interesting to see how the market continues to react, and again, how the Bank of Canada reacts. That'll be, their rate decision is January 29th. Certainly things like this are going to play into that decision. And how that's going to impact things and how they deal with it. If they're expecting or it is going to come true that this tariff's going to come in, it's going to make it more expensive on goods in Canada, force, GDP to drop. Well, the Bank of Canada might have to do a massive drop because we need to spur spending in Canada and savings in other areas. So, I'm curious to see, and all this plays into all of this not only just contributes to, business, like we've said before, to your variable mortgages, your fixed mortgages, because the bond market does react as well. But your lines of credit, your student lines of credit, your business loans. And so, this coming couple of weeks is going to be interesting in wading the waters over the next few months, like we kind of touched on last week.
Yeah, there was one other article I wanted to touch on quickly before we go, and it was from the Financial Post. It says, Canada's housing market expected to get boost from record demand on the sidelines. So it says in December 2024, Canadian home sales experienced a 5.8% decline from November. Despite this monthly dip, the fourth quarter saw a 10% increase in sales compared to the previous quarter, marking one of the most active periods in the past 2 decades, excluding the pandemic era. The surge in activity is largely attributed to the Bank of Canada's decision to reduce borrowing costs by 1.75 percentage points since June, bringing the interest rate to 3.25. Sean Cathcart, Korea's senior economist, noted that the December slowdown was more due to limited supply than a drop in demand. He anticipates a significant increase in demand in spring 2025, aligning with expected interest rate lows and a rise in property listings. Additionally, the home index saw a modest 0.3% monthly increase in December, but was down 0.2 compared to the same month the previous year. David, something we didn't do last week. We didn't give our predictions for the year. And now I feel like it'll be even more entertaining because there's a lot of uncertainty.
Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big. Protect what matters most. Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Geltin Poirier Avocat Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at geltinpoirierlaw.ca. Let's get to the heart of your deal.
So let's do it. Let's get into that just based on me saying that there's a lot of demand. So let's go with, we'll keep it simple here. Let's go with increased. Let's go with number of transactions. Okay, we'll keep it the same as last year. Number of transactions, percentage growth based on value, and let's guess where, as of today, the plus minus on the Bank of Canada's rate, just to keep it somewhat financially, relevant.
Who's going first?
What do you think? You go first.
So sales transact. I think we're like 13,500 last year.
Yeah.
I think it's, I said it, what I was thinking for 2024, 15 to 17,000. I think that's, it'll be back. I think it'll be more back to that kind of 10-year average, which I think is in that 15 to 17,000 range. I think the decrease in prime is going to be, kind of just following the main economists out there. And I think it's going to fall another I'm going to say 1.25%. I think because of the uncertainty, I think there'll be a couple holds in there, but I think in that 1.25 range. And from a price, from a listing standpoint, I think we're our days on market or supply is going to be still pretty elevated. I think, we touched on last week, there's 1.2 million mortgages up for renewal this year in 2025 in Canada. I think a lot of those are rentals. I think there will be a lot of people listing as they come up for maturity. So I think that will increase as opposed to holding. So I think that's going to elevate the supply on the market. So I think there will be good opportunities for buyers, but I think there will be, with that decrease in fixed and variable, will drive like that demand a little bit too. So I think we'll see kind of in that 3 to 5% price increase, which we've kind of historically been like, we've, kind of that historic appreciation in Ottawa, not, anything crazy. But I think that higher supply, because of so many mortgages coming up for renewal, will keep the pricing tampered a little bit in Ottawa.
Yeah, this is an interesting, just kind of touching on that. This was months of inventory. So this is across the GTA. Now, obviously, I know we're Ottawa, but just to give a representation here from, where it started to dip in September, like this is a massive increase. 6 months of inventory is that's a lot. That's extreme, I would say. It's the highest it's been, as we've seen in the last, year and a half. And I would say even in Ottawa, I think last we looked, it was 5.2%, 5.2 months of inventory, which is, above average, I would say, over the last few years, at least, that we've been monitoring this. So I think that will play into it, but those are also opportunities. All these people that are listing, that are up for renewal, that are listing, maybe looking to downsize. These are opportunities for buyers. And I think that will kind of drive the market. So I'm going to say number of transactions, I'm going to say 14,500, but 1,000 more than this year, which would be probably like a 7 or 8% increase, I guess. I'm going to say average home price is going to go up. I think it's going to be fairly stagnant this year. I think just because of all these back and forths, the market will probably stay around the same. So I'm going to say a modest 3% growth in values, and I'm going to say a 1% decrease for the Bank of Canada. So we're kind of in the same range there. I think we'll probably see one in January, and then the rest of it is really like, if you have a magic 8 ball, pull it out, because I have absolutely no idea. So I'm going to say 1% for the year, just at a high level. And we'll go from there, David. So this is our marked. These are predictions 2025. I'm saying 14,500, 3% increase in value, 1% drop in Bank of Canada.
I also want to say, anyone that tells you they know exactly what's going to happen is full of shit.
They're lying. They're lying to you.
Yeah. I think with all of the factors that are going on in the market outside of Canada, inside of Canada, the number of mortgages up for renewal, there is a lot, when polled and surveyed, there is a lot of demand sitting on the sidelines. Whether those people actually come back, we thought a number of them would come back last year. That did not happen as much as we thought.
We've been saying that for 2 years though now.
Yeah. And so, so, now that we're maybe getting, as rates, maybe if with a Bank of Canada drop, like maybe we see a 3 consistently in front of those rates on fixed and variable. Does that do it for people? Does the new 30-year amortizations, does that do it for people, for first-time home buyers? Does that bring them back to the market, from a qualifying perspective? So I think it'll be interesting. Again, we're talking about Ottawa. I know you showed that supply for Toronto. Toronto's condo market is just getting decimated right now.
Bad.
But so it'll be, but that plays a huge part into where investors are looking as well. So it'll be another roller coaster of a year, and we'll just get on our surfboard.
Yeah, Sandra sent me an image earlier today that was touching on that. I think it was like condo sales in Toronto. It was like 4,500 or something, whereas the average was usually like 20,000. Like it was outrageously low, the condo market, just no resale at all, which is very interesting. I'll try to find that for next week. Yeah. So David, I think we slide into the mood boosts. What do you think?
Yeah, I think
we've covered all of the key points we wanted to touch on. Unless there's something else you want to discuss.
I think the Tariff chief economists have spoken today, so I think we could probably move on to the mood boosts.
Yeah. Okay, I got 4 today, and I like them. I'm pulling from the book, and I'm pulling from the email. So here's number 1. What does a thesaurus eat for breakfast? A synonym roll. A synonym roll. Okay. Yep. Number 2, I hate Russian dolls. They're so full of themselves. I like that one.
That's so dumb, it's funny.
Number 3, what did the triangle say to the circle? You're pointless. True triangle. And last but not least, number 4, my friends and I are in a band called Duvet. We're a cover band.
Wow.
Yeah,
wow.
We're a cover band.
Just ending off.
I should have ended on 3.
Strong. Yeah,
I should have ended on 3. Yeah,
that
sorry,
everyone strong there. But overall, they're pretty good. They're pretty good.
We will be back. We will be back. New year, new us, new show. Same. So we'll be back. Next
Same
week.
nonsense.
10 a.m.
Nobody's listening now, anyways. So whatever.
Thanks as always to our sponsors, Big Insurance in Westboro, Centum Canada, and Gertin Poirier Avocat Lawyers. Thank you so much for your support, and thank you everyone for listening. We will be back next week. Have an awesome week.
Deuces.